The other thing that jumped out at me was just the people. So the people I met when I went to the first conference in 2013 in June in New York were just crazy. I mean, I was pretty crazy too, but and the crazy thing about them was whatever they'd been doing before, they dropped it in order to do Bitcoin. They were just like, yeah, I'm just like, I used to be a lawyer and now I do this, or I used to be a philosopher and now I do this. I used to program mobile apps and now I do this. That kind of motley crew of revolutionaries who all saw something really appealed to me because it felt a lot like the early days of peer-to-peer in the early 2000s. It felt a lot like the beginning of the web.
Layer 1 is a podcast and community dedicated to helping you master all things crypto. We'll be bringing you the best interviews with project executives, technical analysis for trading of the most popular cryptocurrencies, and insight into what's actually happening behind the scenes.
As you join us each episode, you're going to hear about tokens, fundraisers, investments, and even crypto conspiracies. But please remember that nothing we say should be considered financial or legal advice.
Come join us on this journey and welcome to Layer 1.
Alrighty, ladies and gentlemen, we are back with another episode of the Layer 1 podcast. We've got an extra special guest for you today. As I was telling Q before the podcast, I think this is our first doctor that we have on. We'll talk a little bit about the coronavirus, but certainly not too much. Before we get to that introduction, though, Q, how you doing today?
I am doing perfectly fine. Thank you very much. I'm writing on the walls. My girlfriend is ready to probably leave me at this point. We're quarantine day like 12, 13. So we're trying to get through this like everyone else. Like you said, we're moving on up in the world. We have a doctor on the podcast, Dr. Stephen Waterhouse, co-founder of Orchid. We're going to talk everything VPNs. We're going to talk privacy. We're going to talk dystopian futures because we always love to do that on our podcast. But Dr. Stephen Waterhouse, Stephen, how are you doing today?
I'm good, thank you. I'm actually on day 25 of quarantine. Yeah, I was in Europe just before all the lockdown started, so I was sort of like a week ahead of the rest of California. Yeah, I'm good. I'm healthy, and the team is being really productive. We've got a lot of interesting things happening we can talk about on this call. Thanks for having me.
Yep, I would love to do that, and we are going to segment a portion of this podcast out to talk about COVID, of course. We've got to continue to do that. We'll probably do that for the next month here, but we'll start out with your background. I know you had.
That's a good question. Are you sitting in a sports car seat right now?
It's more of a gamer chair. But thanks for calling me out.
Yeah, I've been thinking about getting Recaro seats in my Audi, and it looks kind of like that.
Yeah,
you need the straps over the back, right?
If you want, I can send you the link. You can actually get these put into your sports car. But no, yeah. There is no. There's a couple handles here. I'm doing good, man. I like to game, so this is a gamer seat. Thank you. You kind of threw me off my game here, so I'm gonna have to do a little audible. But yeah, history of Dr. Stephen Waterhouse. I want to hear everything that you did as you got into tech, maybe where I saw you went to Cambridge as well. I would love to hear about your time there. And then as you got into the blockchain space, you're at Pantera, you're now part of Web3. So a lot of things to talk about. So let's talk everything history.
Yeah, sure. Thanks. Well, I've been doing this tech thing for a while. So I moved out to San Francisco in 97. After I finished my PhD in speech recognition at Cambridge. I'd been flying back and forth for a couple of years by that point. Knew I wanted to live on the West Coast. And it was a little bit before all the kind of the internet bubble really kind of hit mainstream. And it was a little bit of a surprise when it actually took off as fast as it did, because I'd had an email address since 1989. And so I'd been kind of playing with this stuff and, using the first web browsers. I think I wrote a book on it for like how to use the internet. But it was a bit of a shock, but it definitely trained me for the next sort of 20 plus years of kind of experiencing these waves of innovation that hit the world. I did a lot of different things of my career. Most relevant to this work, in the early 2000s, I was part of a startup that was acquired by Sun Microsystems. Remember those guys? And I got to work with some pretty amazing people like Gosling, founder of Java, and Bill Joy, Whit Diffie. And while I was at Sun, I built a decentralized storage platform. So this was, the idea we had was like, what happens if we start storing things like photos forever? Which seemed like a kind of a crazy idea back then, but turned out that it played out pretty well. And so we built a storage architecture using really like crappy drives and really commodity components. And a lot of the software that run that is a lot of the things that we are now using in cryptocurrency and decentralized systems, Web3 architectures. I spent a number of years fighting patent trolls. It's kind of a slight diversion. It started a company called RPX, and we took it public. Actually started in 2008, so I have some experience in how to scale companies during crises. Although I think this one feels fundamentally different to that period. And then on the back of that, started a venture fund focused on intellectual property. Again, sort of in the very much like trying to protect companies versus extract value from them. Sold that to Fortress, and then while I was at Fortress, decided I didn't want to be on IP anymore, and started talking to Pete Brigger, CEO of Fortress, and he's like, "Yeah, why don't you just don't leave? Why don't you come back with a better idea?" And so I came back a month later with like, maybe we should play with Bitcoin, and this was early 2013. That idea, then when we added some amazing team members, including Dan Moorhead, pivoted into what became Pantera Capital. And so for the next 3 years, I was CTO and partner and led the venture investments there. Got to invest in some amazing companies and just really be on the ground floor of this whole space, starting initially just with Bitcoin and then pivoting into just more general blockchain ideas. We were seed in Zcash, Brave, Circle. I was on the board of Bitstamp, Arbora, Civic, Chain, like lots of really interesting companies. And at the end of that, I decided I wanted to start a company again. I was tired of being a VC. It's always been this sort of thing where I think a lot of people look at, you do your startup work and then you become a VC because that's obviously the transition. But I think for me, I prefer just really being in the trenches and building things. So we started Orchid in early 2017, again, a little bit ahead of the sort of the big wave and boom and hype of the ICOs. Brought in some incredible team members, including my co-founder, Jay Freeman, and CTO. And also managed to bring in a lot of great partners on the investment side, guys like Andreessen, Sequoia, Blockchain Capital, Overseas Kinetic, Fabric, etc. So another year later, we brought in managed to scale a really good team and brought in some more support from the investment side. And then last year, in December, we launched the entire network and applications, and also listed on Coinbase. And just a couple of days ago, we launched on OKX, which is our first non-US exchange, or big non-US exchange.
Got it. Yeah, that's amazing. Quite the background, and obviously you guys have seen some really strong initial success with Orchid. We definitely want to get there. Definitely want to understand what Orchid is, what it does, where you see it progressing in the future. But Pantera Capital is obviously a big name in the space. They've got quite the reputation. As you were on the venture side with Pantera, what were some of the key takeaways that you learned? How maybe specifically the crypto industry is different than other tech industries, perhaps around the fact that it just moves incredibly quickly. And I would imagine from that venture standpoint, would it be tough to invest in new tech, even though that tech is evolving so quickly, or was that not the case necessarily?
Yeah, so a couple of things we implemented. First of all, and there's just some rules that I'd learned from other friends in venture, and also being on the receiving end of venture capital over the years, started to think about how I wanted to be treated. One of the things we did was we networked like crazy, which was relatively easy because we were very early in space, and so we got to know a lot of the sort of OGs, and then we kind of became OGs ourselves. And so getting those intros and the kind of connectivity to the hot companies, which aren't always the ones you want to invest in, but you should talk to them anyway, was relatively easy. We had a lot of access, but to compound upon that initial advantage, we built up databases of all the companies in the space. Even as early as 2013 and 14, we were talking to hundreds of companies every year. And when I say talking, I don't mean we just like swap emails. We'd actually get on calls or like try and meet with as many as possible. Paul, who's a partner there now, when he joined, we would send him just to, somewhere in Argentina or Brazil or Korea, and just really trying to understand the landscape of the place and what was happening. What was at the time it was a very Bitcoin focus. So what were the local exchanges doing? We had a lot of kind of thematic ideas. I'd say that for maybe like a year or so, we were probably a little too focused on the idea that Bitcoin was going to solve all the problems. There's actually is a subject of an article I wrote recently, which was talking about how I missed Ethereum. And those lessons learned from those experiences too. I think that the lesson I had from that particular experience was just that try not to discount anything, and also the idea of looking, which was definitely counter to the way we were trying to invest at the time, but looking and trying to take small positions in things, even if they look like you're not quite sure what's going to happen next. And then if you think about kind of getting into venture theory, but if you think about how you want to invest, there are stories of some seed funds that were in Google very early, but then basically blew the fund because they invested in everything else they saw also. So that's the idea of having a seed fund that's too scattered. But if you can see something that might work, and so you put a little bit in it, and then you can kind of follow on, that's also an interesting perspective to have. We tried to be very thematic. We tried to think about what was going to happen in what kind of sequence. So one of the ideas we had early on was the idea that local exchanges were going to be a very important driver of the ecosystem. So it wasn't just going to be one big global exchange or a couple of big global exchanges, and that's where it is now, 7 years later. But during the period of the last few years, Pantera was able to sell Corbit and also Bitstamp and then Coins.ph, which were all effectively local exchanges. And so there was some differences there. I think that the one big difference I found in this space from anything else I'd been in was just how valuable your personal network becomes. It's a very social space, and I think we're all feeling this sort of hit right now because a lot of us, I would have been in like 3 different continents already in the last few weeks if we hadn't had this very needed shutdown. But that's something I've been trying to double down on now is staying in touch. It's great talking to you guys, great getting the word out and so on, and just trying to stay in touch with people and really realize how valuable those networks become when, let's say, you're trying to launch a company like in December last year, and how many favors you need to pull to try and make sure that things really happen in the way you want them to happen. If you want to be on a certain wallet, or you're trying to integrate with a certain sort of market cap consolidator and so on, those connections become really valuable.
I do want to talk on your kind of investment thesis now, and where you kind of, or maybe just like where you see a lot of value occurring in crypto. But I do want to kind of step back a little bit. You did talk about finding Bitcoin. So I want to hear like what actually brought you to Bitcoin. What specific value propositions did you see in Bitcoin? And then I do want to hear the Ethereum story, because you kind of glossed over the fact that you missed out on Ethereum. Who introduced you to Ethereum, and why not?
That was like brutal. Well, and so it's a story of two ideas, I guess, so two mindsets. So the mindset I had in early 2013 was, okay, I've taken a company public. I'm already like in this huge hedge fund. I get to kind of play with lots of interesting ideas, but what's going to be disruptive? Like, what's something where it's like hardcore tech, which is stuff I love, that's going to really change things? And my friend Sean O'Connor, who's not super well known in the space, unless you're kind of really sort of OG, etc. He was early Kraken, and one of the not part of the team, but one of the advisors there. And I'd worked with him in 1999 at a .com startup. And his company at the time had developed the first capture technology. So the technology which, or one of the first technologies, and we were using it to prevent fraud signups for this web platform we built. And so we acquired his company. I'd stayed friends with him ever since. And when in early 2013, I was looking around for new ideas, he's like, hey, you should check this Bitcoin thing out. So when I looked at it, certainly the themes of decentralization that I looked at in the mid 2000s, early 2000s at Sun, that really jumped out at me. And then it seemed like what was possible from a platform perspective was that with the decentralized technologies and distributed systems technology, and then the application of proof of work and a distributed currency, you could scale the concepts that we built that were being used in data centers. So to understand what I'm talking about, the back end of Amazon, Google, Dropbox, Facebook, whatever, is the same kind of tech that a lot of people are throwing around today, talking about distributed storage and cryptographically incentivized storage or bandwidth and so on, but it's inside a data center, so you know it's safe, you can trust it. And in order to scale that to wide area network, you need something like Bitcoin to make that jump, right? So once I saw those two things were put together, I was like, oh wow, I totally believe in distributed systems and peer-to-peer and technology, and now you can actually do this at scale on a wide area. The other thing that jumped out at me was just the people. So the people I met when I went to the first conference in 2013 in June in New York were just crazy. I mean, I was pretty crazy too, but and the crazy thing about them was whatever they'd been doing before, they dropped it in order to do Bitcoin. They were just like, yeah, I'm just like, I used to be a lawyer and now I do this, or I used to be a philosopher and now I do this. I used to program mobile apps and now I do this. And I was like, yeah. And then some guys like, and I used to be a banker and I do this. I was like, wow, that's like a big deal, you know. Moved out of banking. And that kind of motley crew of revolutionaries who all saw something really appealed to me, because it felt a lot like the early days of peer-to-peer in the early 2000s. It felt a lot like the beginning of the web. It felt like this sort of disruptive set of personalities. And then the more I spent time in it and got to know the people and realized there were just some very brilliant people, and I've continued to believe that, is that I believe that the space has a very strong quotient of just exceptional talent. And one of the theses we had at Pantera, we would just point out these potential disruptive things. We would also just point out like the amount of talent that was coming into the space, and the kind of people were coming in seemed to indicate that something was going to happen. We weren't quite sure exactly what and when. We had our own theses. My personal attraction to it related to something really which is somewhat been forgotten in some ways, which is the idea of bringing banking to unbanked. And the analogy that we worked on back then was the idea of in Africa, when you switch to this huge switch to mobile networks, the switch was not from wired phone lines. It was from nothing to mobile networks. And that idea of, it isn't even a leapfrog, because you're leapfrogging from nothing. It's like, well, what if you could leapfrog and jump all these people who don't have banking, and that their version of banking is to dig a hole in the ground, or to have someone in the village or the town or the township, like in South Africa's cases, who kind of keeps a record of who owns what. Like there's a human ledger, right? And this happens. And so you kind of take these cases and you say, well, what if we could leapfrog this and get this kind of distributed banking that's just literally on a cell phone? Like if we can give people $50, $20 Android phones, could they just have an application on there, and that's their thing? And then of course someone can still come and steal a phone or point a gun at their head and make them do something, but you've changed the metaphor. You've changed the way that this could happen. The mobility starts changing. People can move to another village. They've still got their money in their thing. They don't have to have the village elder hold on to a ledger in his head. And so this idea really resonated with me, and I saw the opportunities there. I think then everything kind of history showed what happened next.
That's what allowed you or kind of convinced you to jump in. It's funny because you brought it up, but I think it's a valuable point looking back on the history of Bitcoin, and especially on the venture side, right? A lot of folks would basically say, to their LPs, right? Hey, we don't know where this is going to go. We don't know what's going to happen, but there is so much talent here. Something's going to bloom, right? All these seeds have been dispersed across this brand new industry. Something's going to happen. So, kind of scattering your money into various niches could prove to be very successful and rewarding, which it obviously was. So,
and I think that narrative is good. That narrative worked and has worked for the idea of just generally investing in crypto. The more challenging thing, which we found, and I think a lot of people are still finding, is what does that mean for a venture investment, right? Because unless you do a sort of a seed venture deal, which has the disadvantage, as I said, of you invest in Google and then you kind of waste the rest of it by losing all the money on everything else, then then you have to start getting a little bit more thematic and figure out what happens in what sequence. Because predicting the future 50 years out is a lot easier than predicting the future 5 years out and 5 or 10 years out. And venture returns are designed to be, venture funds are 10-year funds. And I think that's still a challenge for a lot of people, is figuring out what happens when.
Right.
In that space.
Yeah, for sure. For sure. So, before we continue on to Orchid here, like Q said, what's the ETH story? Why?
Oh yeah, sure.
Yeah, kind of how did that happen? And as you look back on it, what was maybe the main reason you glossed over it?
We were hanging out a lot with the Blockstream guys and a lot of that crew, and some of that crew actually were part of things like Mastercoin, and then there was a couple of other things before that. And so I'd met a lot of the guys. I knew Vitalik. I'd never met Joe, and I'd never met Gavin. And they're actually the two who I spend most time with nowadays. Gavin and I are friends, and I'm an advisor on Web3, and Joe and I do a lot of work together as his work at Consensus. I was at the Amsterdam conference where it all started. I totally had access. I had a lot of opportunities to be doing it. And it's a funny story, and it's a little bit of a strange one in the sense that, why would you tell people the story? But I think it was a little bit of a case of knowing too much. I'd worked on virtual machines at Sun with Gosling and Diffie and all these guys, and I kind of looked at this problem and was like, wow, this is so much harder than you guys realize it's going to be. It's going to be, you're going to have so many issues. What about security? I looked at Solidity. I was like, God, this thing's you could walk drive a truck through the security issues here. But I totally got the blockchain concept. I saw it. We were writing theses about it. We were trying to invest in things. But we just didn't see it coming until it was sort of too late. But the powerful part of the message for me in terms of learning about how to think about opportunities was when we started Orchid, and I saw the token space, the kind of ERC20 concepts, even before it was in ERC20, when it was Gollum just doing its thing. A lot of people, by that point, there were Ethereum maximalists, right? And a lot of my friends in the space by this point were saying, oh no, this isn't going to happen. Why do you need a token? Why don't you just use Ethereum and so on? And I looked at it and I was like, well, I'm sure there's going to be probably some really bad ideas here. But on the other hand, I remember missing Ethereum and having people say the same thing to me, we should just use Bitcoin, everything will be fine. And so then I was open to really investigating and digging into it. And then we were able to kind of use some of that mindset to be more open to this new concept.
Yeah,
so there was a positive spin on that in the end.
For sure, yeah. And fast forwarding to today, obviously you're involved with Web3, and like you said, you work closely with Joe Lubin to some degree, and Orchid is involved with Ethereum. Do you, where do you see Ethereum going from here? Obviously, DeFi has had some issues as of late after kind of the Black Thursday moment that happened a few weeks back. Is are you still as bullish on Ethereum as you were previously? You know, where do you kind of see that proposition sitting today?
Yeah. Well, without getting too controversial here, I think
get as controversial as you can.
I think that Ethereum's position right now is that it's all about execution. If they can execute on the ideas that they've got, on the architectures they've got, then they should continue to be what they are right now, which is the largest actually decentralized smart contract platform, and I use those words carefully, and with a great developer base and so on. The challenge to them is if somebody else can, and this is I think part of what Polkadot's play is someone else can challenge that in terms of making it easier to develop on, or I think the whole scaling concept, I think, is kind of a red herring at this point. There's so many scaling solutions. They have different advantages and disadvantages. We have our own one. I was actually looking at some notes from early days of Pantera, and the whole conversation back then was like, well, the biggest challenge to Bitcoin is scaling. And now everyone's just like, forget it. Bitcoin's not about scaling. And today, a lot of the conversation is, well, the big challenge to Ethereum, like the whole last year was like about scaling. And then we got like 5 different scaling solutions, including our own that we use ourselves. And everyone's like, okay, well, now it's like DeFi security. And so there will be another challenge over time, each time round. There are some sort of fundamental nuances. I'm friends with the Vega team, for example, and they're looking at how to build their own layer 1 platform to avoid some of the fundamental issues around DeFi with Ethereum. So you may get some specialized applications like that that are needed for things. I think that the cross-chain compatibility around things like Cosmos and Polkadot, I don't think they will be Ethereum killers. I think they'll actually be strengthening to Ethereum. But then you may see, for example, like the Polkadot main chain may be something that people will say, oh, well, maybe this is easier to develop on. So I've still got Ethereum, but I'll use this to do certain kinds of things. And we've certainly looked at some of the opportunities with parity, and especially when it comes to things like zero knowledge proofs and our ability to be able to do those within a different framework than waiting for someone to release them on Ethereum. But I think it's all about execution right now for Ethereum. I think they have a privileged position where they can kind of cherry pick cool ideas that are being launched by other layer 1 platforms. Kind of beg, steal, or borrow, like pick one. So I don't think that, it's almost just like they're in a privileged position where it's all about execution at this point.
Yeah, we had Joe Petrowski from Polkadot. He's like a technology guy and a research analyst over there. And then we participated as well in that lock drop on Edgeware. So we're familiar with the Polkadot system. We like those guys as well, and I think that they're gonna do good things for. What's that?
Are you staking Kasama? Do you have your?
No, we're not staking. We didn't set up a staking node on Kasama yet, but we are planning on staking our Edgeware soon. We just kind of wanted to see the kinks worked out.
I got some dots as an advisor, and I've made some Kasama, and I started staking and playing around with it. They seem to have a very slick interface so far, which I'm sure is a lot of Gavin's influence.
Yeah, definitely. And I think that they're going to do some good things going forward, like you said. But we have hit our 20 to 25 minute segment that we always hit, where we're talking about something completely different than what we actually have you on for.
Yeah, I know, right?
So we'll get into Orchid here. But I think before we touch on Orchid, people need to have a kind of foundational knowledge of what VPN is. So if you could explain VPN and then Orchid, that would be great.
Yeah, sure. So, VPN stands for Virtual Private Network. And originally VPNs were really something that only people who were working in a large company needed. And the idea was that you would have a client on your computer at home and you'd tunnel into the corporate network. So you basically use encryption and connect into a server that's inside the corporate network and it would make it feel like you were in that network. Right. So we're kind of familiar with this issue as we're all sort of working from home right now, because for anybody who works in a big company, it feels different when you're outside the big company firewall than when you're inside. And then over time, what happened is the development of these consumer VPNs. So there's enterprise VPNs I just talked about. Consumer VPNs, people started using these not to tunnel into or tunnel through a firewall to a company, but also to be able to change their IP address and also have a more private kind of experience on the internet. So there's a couple of main use cases right now. Number one is if you're in San Francisco and then you fly to Mexico and you still want to watch Netflix, Netflix says, "Oh, I'm sorry, you're in the wrong country. You can't watch Netflix now, even though you pay for it." And so you're sitting there going, "Damn!" Like, and I'm not, of course, I'm not proposing that we should do copyright infringement, which technically it is. But you say, "Hey, I'm just gonna what I want is I want a different IP address. I want to make it look like I'm in San Francisco." And so you use a VPN maybe to change your IP address. And what you've actually done is you've kind of like logged into a server that's in San Francisco, right? So that's the basic concept. You're able to, and that's called geolocation shifting, or geographical shifting of IP. So that's interesting for people. And you can imagine if you're behind a big country firewall like China, and you want to read the news, or you want to look at Twitter, or you want to look at Instagram, or you want to look at non-Chinese state propaganda, you might say, okay, I'll use a VPN to get out of this firewall and then something else. And this is why in a number of countries like China, Russia, and other parts of the world, VPNs have a sort of a dubious legal framework. They're declared illegal in many countries, but also somewhat tolerated to a certain extent. So that's one kind of use case. The other use case is if you understand about what's happening when you connect through your ISP, so like Comcast or Verizon Fios or your DSL company, all your traffic's going through that from home or from your office, right? So effectively the ISP can sit there and just sniff your traffic and figure out what you're doing. They can just look at the traffic that's happening. People use VPNs to avoid that. So they say, well, I'm going to use this VPN because now I have an encrypted channel and I'm able to hide my traffic from my ISP. If you're using an open Wi-Fi connection, I highly recommend that you connect through a VPN because most of those open Wi-Fis are very insecure. And so you have, on the one hand, this idea of stopping censorship, which is the idea of like geolocation and being able to kind of access the content you want. On the other hand, it's like stopping surveillance. So that's the basic reason why people use VPNs. Gotcha.
Yeah, and obviously for those who are kind of more on the trading front, or even what you would, I guess, call the investing front, as many tokens or various cryptocurrencies are not available in the U.S., people within the industry have become more and more comfortable with VPNs. If you, even at this point, still want to trade futures on Binance, one of the largest exchanges, and you're based in the US, you have to use a VPN to access those services because of the regulatory concerns that Binance has. So, I
had that personal experience actually recently. So a couple of days ago, we launched on OKX, big exchange out of Asia. And I have two passports. I have US and UK. And so I'm able to jump around some of the restrictions if you're a US citizen. So I legally was able to KYC through OKX. But in order to get to the point where I could do that, I had to use a VPN to make it look like I was in London. Yep. So I wasn't breaking any rules. I was following all the rules, but then it kept telling me, "Hey, you're in the wrong place. So we're not gonna let you do this." So yeah, you kind of get the concepts there.
Yeah, for sure. So understanding that VPNs, as you said, kind of grew out of this enterprise need at first into more of a consumer need. Where does Orchid fit in, and what's certainly what is Orchid, but kind of what is the need for Orchid at this point as you see it, understanding, like I said, that VPNs have really grown and make a pretty significant industry at this point globally.
Great, yeah, good question. So the example I gave you where you decide that you want to tunnel all your traffic through a VPN, and wherever you go, you're putting all your traffic through that VPN, whether you're at work or whether you're at home or whether you're on your phone. You're like, I'm going to use this VPN, and we have a number of VPN partners I'll talk about in a minute that we think are good, and maybe that VPN is a good company, right? So something like Private Internet Access or Nord, or these are some of our partners now, or maybe they're not. And there's a lot of free VPNs out there, and it's one of the biggest growing segments is like free unlimited VPN. But one of the business models for these VPN companies, especially the more free ones, is to sell your data. And so suddenly you're saying, hey, what I want to do is have a private experience. But actually, really, what most people want is they just want to kind of access the content they want, right? They're less concerned about privacy in a lot of cases. That's kind of like still a more niche part of the business. But they want access. And so, for example, one of the fastest growing segments right now is what I call the Great Firewall of the high school. And so if you are in a high school and you're trying to connect through the school Wi-Fi, they put content filters on there so that you can't access Snapchat, you can't access Instagram. And so the kids in high school download these VPNs onto their phones, and now they can, right? But the VPNs they're downloading are usually free and all these kind of things. And I don't know, who knows what that VPN company is doing with the data. So this inherent weakness and this concept of a centralized point that you're traveling through your data, our realization a few years ago was that what if we could decentralize this? What if we could say, what if you could choose multiple different VPN providers that you could put your traffic through? And also, what if you could chain them together in what we call multiple hops? And so when you do that, and this is the concept of onion routing, which is exemplified in the Tor free platform, but we're quite different from that in a number of ways I can explain, is that you're able to now hide your IP address from the website that you're going to. So the websites are also tracking all the data. They're picking out like, oh, well, this is Zach, because I know this is IP address, and I can correlate that with some other data he did and so on. But what Zach really wants to do is access Google or DuckDuckGo without them knowing that he's searching for this thing. And so using our multiple hop architecture or chaining the providers together gives you that capability. And so then when you kind of scale this up and you say, well, if I want to have this network of different VPN nodes that's giving me encrypted traffic and I want to chain them together in different ways, that sounds great. So if I'm going to design this, the first thing you do without crypto is you say, well, how about we set up billing relationships with all of these different providers? And then if you start scaling that up to, we've got like around 10 right now, but if you start scaling that up to hundreds or maybe thousands of different nodes that you could have there, how are you going to manage those billing relationships? Well, you have another centralized party and so on. So you kind of like look into this thing, you're like, hang on, this idea is falling apart. So with Orchid, what we do is instead of paying the VPN providers with a credit card or with a bank wire or something like that, and instead of aggregating it, our system is designed where all the transactions happen with cryptocurrency, with the Orchid token. And so the client is sending payments over the network, and the providers are receiving those payments and cashing out Orchid tokens in return for the bandwidth they're providing. And there's a lot of other subtleties of how we scale that and how we prevent different kinds of attacks there. But that's the basic architecture, is a decentralized VPN, which is powered with cryptocurrency payments.
So these partners that you've kind of aligned together and that are using your token, they're comfortable with using cryptocurrency as a form of payment? Does it cash out immediately? Because we see these things in payment systems, right? Like we had Lolly on the podcast, and certainly Gap, one of their partners, isn't going to be accepting Bitcoin into their, I guess, ledger. They get paid in USD. I'm interested to hear, like, from your perspective, these VPN clients that you've set up in this partnership network, they're comfortable getting paid in crypto.
Yep, the ones that we've partnered with so far are comfortable being paid in OXT. And it also, it definitely informs our growth plans with exchanges, because when we look at a new exchange, and OKX is an example. So in the last couple of years, we've seen when projects launch, they have this very much like, let's just launch everywhere on God and every exchange, no matter how big or how small they are. When we look at exchanges, we're thinking about what's their global coverage, which fiat pairs are they trading into, which crypto pairs are they trading into, and also what's the geographical coverage of their user base, because we want to make it so that any end user can use the application and be able to get OXT from whatever local exchange they're going to use. And I use local exchange in a more general term now because it's obviously these local exchanges cover more regions. But OKX was a great partner because they cover the Chinese market, the Indonesian market, Russian market, and some sorts of the Korean market. So that gave us a lot of new areas. And it's the reason why we then translated our app and our website and our DApp and everything into all those languages so people could use it. Because we're a little bit different from many projects in the sense that we actually have a product, something people can use. And so when we think about going global and getting into different regions, we're also trying to figure out how to get growth in usage by that proposition.
Sure. And again, on the token front, right? I mean, this is a publicly traded token. You guys are on Coinbase already, which is obviously a significant achievement. Now OKX, like you're saying. Have you all thought about how potential price fluctuations and some of the speculation that happens in crypto could say positively affect those node providers who are receiving payments in the OXT token, or in some cases negatively affect them if the price for some reason dumps by a significant amount in a quick period of time?
I mean, I guess my concept there is that there's two phases to this, right? There's sort of the early days, which we're still in a little bit right now, which is there's the usage is very much enthusiasts and people. It's a smaller group, but as this thing scales, then hopefully we get to a point where if there's a significant enough amount of transactions and a significant enough amount of OXT, then node providers could hedge that. And so we're seeing within DeFi and so on different hedging mechanisms. And so that's really where I think, and people often ask us, why don't you have a subscription model? So we don't have a subscription right now, it's all pay as you go. And I say, well, subscription is just a derivative of pay as you go, right? It's literally technically a derivative. So it's a way of pricing something such that over time, you're gonna get the same expected return or a better expected return than if you literally price people based on pay as you go. So I think the same thing is true as far as returns for providers, as you can hedge these things over time. Certainly, it can be a concern initially, but with the partners we have, which they're very much invested into, and literally actually, with their node stakes, are invested into the project, we're not so concerned in the short term.
So take me through a user experience when using Orchid as a VPN service, right? So you've already gone through that these VPN providers are getting paid in OXT. Is there an incentive from the user perspective to do they receive OXT in some form by participating in the network, or is it just a payment vehicle for them to use this service?
We've looked at some ideas around kind of more advanced airdrops. We're working with some partners on that. Right now, there's a Coinbase Earn program. And there's also an OKX rewards program. So that's the primary mechanism being using there. We've looked at some other ideas there, and that could happen in the future. In terms of experience right now, we've worked very hard on the design side to, and you kind of see with our branding and our kind of look and feel, we don't have this scary dystopian vision of the future with our branding. We have we call it the natural internet. That's the concept for what we're trying to build, with the sense that right now it's unnatural in the sense that you're being watched and tracked and your data is being sold. We think of what we're building as more of a natural concept of how an internet should be. And it's certainly the internet that I thought we were building 20 plus years ago. But the user experience right now is, we think it's about as good as you can get in a proper decentralized Web3 environment. There are other companies that have, I think, a better user experience, but it's a more centralized experience. There's more centralized wallets being used there, because we want, our system is difficult to use. Well, it's not difficult to use, but it is, given how private we've designed it, it's as easy to use as we can. Having said that, we are working on some other payment channels. Let's just put it that way. I can't reveal all the things we're doing, but we're working on ways to make it so that it will be like using any VPN in terms of how you pay for it and how you would access it, with still using the same backend architecture as everything else.
Got it. Yeah.
That'll be coming soon.
Yeah. The white paper is fascinating, and it goes into not only a lot of the details of the current, Orchid setup, but kind of has a page or two on some of the future use cases that might be seen with Orchid. So if folks out there, you haven't read that yet, it's definitely worth a read. It's very obvious, right? Ethereum has some issues with maybe scalability or usability,
Mm-hmm.
whether it's solidity or whatnot. And obviously you all have chosen Ethereum to use for Orchid. So there's a natural balance between giving your VPN users or your VPN providers a usable, scalable experience, right? And this is not something that Orchid struggles with, solely. This is a problem that every crypto project has. So as you all look out into the future, is there a tipping point in the short term, medium term, or long term where those decentralized providers, are able to better compete with some of the centralized ones?
Okay, good question. Yeah, I think there's a couple of things. So I'll take the first part. So scalability, we came up with a new approach, which we call nanopayments, or probabilistic nanopayments. So the way that works is that there is a scalability issue with Ethereum if you do all your transactions on chain. So in our system, what you could do is you could say, okay, you're a node provider. I'm going to pay for bandwidth from you. And we're going to set up an arrangement where at the end of the month, you're going to send me a bill, right? And then I'm going to pay you with OXT. And so you're going to kind of like rack up my bill. But then what could happen is I just run away, right? Because I'm just like, well, I'm just not going to pay a bill. And then the flip side can happen, which is that I could pay you up front on the client side. I give you a month's worth of OXT, and then you could run away, right? So you end up with this problem. So the way we solved that is we said, well, let's do every payment on a packet level, so that if after a couple of packets you run away or I run away, then it's okay. It's no big deal. It's a tiny amount of money. For like one tiny packet is a really small amount of money. So that was one innovation that we realized. But in order to do that payment on a per packet level, I mean like literally like internet packets, what you need is a different kind of payment channel. So the payment channel we worked on, effectively, when you're getting paid in like a ticket. So each of these little tickets, only one of them is going to be worth something. So if you collect enough tickets, one of the tickets is going to cash out into this large amount of OXT. And the way it's designed is that on an expected basis, you're going to, as a node provider, you're going to receive the same amount of OXT as you would have done as if you were paid every time on chain on each packet level.
Have you heard of the project LivePeer?
Yes.
They seem to have the same structure that you're talking about now.
Yeah, I don't like to talk bad about projects, but they copied us. They copied us, and I would encourage them to actually read the new white paper because they copied an old version of our design. Yeah, the similar architecture. But I also want to point out that our nanopayments architecture, as implemented in Orchid, can be used within Orchid. We could be used by anybody else, but it could, within the Orchid network, it could be used to pay for content. It could be used to pay for subscriptions. It could be used to pay for storage. It could be used to pay for processing. It's not just there for bandwidth. The current implementation and the way our apps work, it works for bandwidth. But if you want to think about like, we have a joke internally, which is that we have like a hashtag no roadmap. And so on Telegram questions, people are like, oh, wow, you guys are making so much progress. And I'm like, well, yeah, it's amazing what we can do without a roadmap, right? And the reason we do this is not because we're trying to be we are trying to be super secretive, but it's not because we're trying to fool people into thinking that we're doing something that we're not. It's just like, if you look at other companies, I mean, we think of ourselves as a company that has a project. The company is Orchid Labs and the project is the Orchid Network right now. And so Apple doesn't go around like publishing its roadmap for the next couple of years. Open source projects do, and the project is open source. And so as we develop more with the community and the community starts building that, there will be roadmap that people will be working on. But yeah, we have a lot of other ideas about what we can do with the network. I think the second part of your question, though, in terms of usability, is more important to us right now, which is that yeah, Web3 dApps and apps and so on are quite tricky to use, especially if you actually design it in a private, decentralized way. I think there's some interesting things happening today, which is that people are getting a lot more familiar with touchless payments, right? So I buy this or Orchid brand or the bunny and so on. So when you touch something nowadays, people are like terrified to touch things. Like if you get into an Uber right now, you kind of like roll up your sleeves and you open the door, and you kind of don't touch anything and you don't touch your face and so on. So when you want to go pay for something, like there's a couple of coffee shops that are still working out here, and they have like a glass screen where they push the coffee through the door, and then they have that like square thing and you tap it. So suddenly we've gone to this point where people are saying, well, hey, I'll just carry my phone around. I don't need to carry cash. I don't need to carry cards. I'll just carry this around. I don't want to hand my card to someone in the US. Europe's a bit better because, you kind of have more touchless payments, but I think we're going to see part of the result of this situation we're in right now is like starting a global adoption of touchless payments as the standard. And the next step of touchless payments, which people are starting to get more familiar with, is QR codes, which is like, oh, there's a thing here, I can just scan it. Like, cool, I'll just scan that and I paid you. I don't even have to like touch the screen. I can just scan this thing. So that's where I start to see like a consumer behavior shift. And I'm certainly not suggesting that we're all going to suddenly start using stable coins and so on, but it does lower the barrier for adoption of that idea on a consumer level. One of the innovations that we figured out with Orchid in terms of how to use these dApps and so on was to give people a QR code. So now, if I've got an Orchid app and you just downloaded it, I can actually share my so I can share on this. And for those of you trying to scan this, it's okay, you can. I can share this account. It's one of our test accounts. And so now you can share my credentials. So we use this initially for people to be able to share from one device to the other, which is a unique thing in the VPN space. So if you've got a desktop at home, and with desktop apps will be shortly coming, you could scan this QR code and then have the same payment structure that you set up. You didn't have to use a username and password. You didn't have to log in. You didn't have to copy a profile. You just scan something. So I think innovations like this is what's going to enable more usable Web3 apps. And I don't think that's that much of a jump. I think within a couple of years, we'll see a lot of people being quite familiar and comfortable with using these different kinds of authentication and payment structures.
You kind of touched on it a little bit there, but you talked about third-party applications and kind of building on top of Orchid, and you touched on one there. But what in the future, kind of near term as well as along the road, what kind of dApps or apps do you see being built on top of Orchid in a sense?
Yeah, so one thing which is interesting is we've thought of Orchid we're not naive enough to think that we're just going to build this big B2C brand, right? Maybe in the crypto space, we can get all the crypto people to use Orchid. That'd be awesome. But it's not that many people, right? So, some of our partners have much better consumer brands, and they spent a long time building that out. And so with Orchid, what we thought of is it's really like a VPN and package in a box. So all of our code is open source, the client's open source, the node provider code is open source. And so you guys could say, hey, we want to be node providers. We're going to set up a bunch of traffic. We got friends who want to use us. They trust us. So we'll route traffic to people. And I've got like 20 other friends and they're going to be part of this network. So you guys today could do that. You could set up your own nodes. You could set up what we call a curator, which is the list of nodes that the application trusts. But then you're looking at it and you're saying, well, what about the app? We want to release our own app. It's like, well, you can take our code and then you could integrate that into your own VPN app and your own branding. And, you could push it on the podcast and so on. So suddenly you've got your own VPN company. You've got the apps and then you've got some node providers, whether you want to run those yourself or have your friends or other people or you could set up relationships with other VPN companies that we haven't set up relationships with. And so if you think about being able to use the Orchid code on the client side and integrating it into first VPN apps, and then the next thing we thought of is well, what about any app? Why isn't we're starting to see VPNs integrated into browsers now. Why couldn't you just have Orchid just start up when you launch WhatsApp or launch Signal or launch Snapchat? Like, why is it that it's running separately? So that's an idea we've been looking at a lot and talking to people about what could they do to integrate Orchid. And that's on the VPN side. We've also thought about maybe you could pay for content. So instead of having to go through this paywall and so on, what if as you're using Orchid, you're paying for that web page, and there's a negotiated thing between the web server that's running an Orchid node and the Orchid client that then's connecting through and not subscribing, but kind of paying as you go for that content. And other companies have looked at that, and I know the Brave guys have kind of got their own implementation. We think our version could be a lot more decentralized and easy to set up, but it's an area that we've been looking at also. The same thing goes for video streaming, like LivePeer has been doing. Another interesting thing to think about is right now we have a VPN wireline protocol, so separate from the cryptocurrency side. We have a specialized, very novel wireline protocol. It actually runs over WebRTC, which is one of the protocols that we're using right now with Zoom, which has the advantage that it's not really been identified in big firewalls like the Great Firewall of China, and is actually quite hard to differentiate between like legitimate video traffic. But it also has the property that you can change the protocol. So imagine you and I want to communicate over Orchid, and we want to use our own encryption protocol. So we could actually agree upon that. I could upload the protocol to you that you're going to run, and then I could pay extra, so essentially pay for processing for that protocol to be run. And so this is the idea of what if Orchid could be used not just for paying for bandwidth, but also paying for processing. And so there's kind of like a more general framework of things that we've been looking at here as far as nano payments are concerned. Wow,
that's fascinating, and I'm sure the ideas are just flowing, right? Whether it's in the office or in this case, kind of at home quarantine. So with that as a transition, there was something you mentioned at the beginning of the episode that I wanted to jump back to as we kind of look at the current state of things and this crisis, perhaps versus other crisis. You mentioned that you felt this COVID-19 crisis was significantly different than the crisis, kind of the great financial crisis we saw in 2008 and 2009. Why is it so much different? And just broadly, where do you kind of see us sitting on a timeline for when this could potentially be done in the U.S. and globally?
Wow, that's a big question.
Yeah, it's a lot there, I know.
Yeah, I've been tracking this thing since January, really because I became very alerted to it because of the censorship that was happening in China around the early days of this, which was something that wasn't talked about very much at the beginning, but now a lot of people are starting to recognize that there was significant censorship, even in early December. And so I started tracking the news around it at that point, and I've continued, and I have a newsletter which I've been starting really to try and focus on my newsletter is very much focused on censorship and surveillance, and then the combination of that with cryptocurrency and the issues that can be solved with cryptocurrency, and the care with which we need to design all the networks that we're building to make sure we're not just building a more dystopian future than the one we have currently. I think that on a timeline, it's really dependent upon how well we're able to do these lockdown efforts, and also the cohesion with which different, like let's just take the United States, where the different states in the United States actually do that and enforce that. We were talking earlier before the call of what if the scenario happens where California comes out of this this crisis in good shape in a couple of weeks, and then wants to reopen trade with parts of Asia. And then you can imagine, say, China saying, well, yeah, that's great, but you need to lock down your borders to other states in the United States. And as we saw recently where Trump tried to enforce a quarantine of New York, and the mayor of New York said, actually, you can't do that. And they checked, I don't know that, I'm not a constitutional expert, but I imagine there's some rules around the idea of free movement of people and trade within the United States. Well, if California does a great job of locking down and some other state doesn't, then how is it fair that California can't start, it's like one of the largest economies in the world, can't start then restarting its economy with someone else? So I think that's kind of like a weird dystopian kind of viewpoint of what could happen, but it's probably not a thought experiment for much longer. It might be a real experiment that we need to do. If we can come through this with, quarantine is technically 40 days, and in an Italian word means 40 days. I think that we will be at least locked down in the places that are enforcing lockdowns or people are voluntarily doing these lockdowns. I think it's a 40-day proposition, not a 2-week proposition. It may be longer. I do think that, rather sadly, I think we are, and I think we're starting to see it today, we are going to see and experience some pretty bad times over the next couple of weeks. And I putting all joking aside, the human cost of this is really intense. A couple of weeks ago, I have somewhat of a history in data modeling from my PhD, and I started doing some data modeling and just doing basic exponential growth factors and saying, okay, if you take the numbers now and you say that things double every 7 days, what does this mean? And a couple of weeks ago, I said, we're going to hit 1 million cases this week, which is the week we have right now. And I think by Friday or so, we'll probably see 1 million cases globally, which is definitely a psychological threshold for a lot of people, for anybody, right? And then we'll see 2 million cases shortly after that, and so on. So I have no idea what the real topping out point is, or whether or not the cases that we're seeing are really a real measurement of what the actual cases are. It's much more difficult to kind of sadly to fake the mortality rate, but the cases rate, I think, we'll start blowing through 1 million or 2 million cases, assuming we can actually test these things and get proper tests done.
I feel like secession has been a topic for a while now. I think that's starting to come to people's minds, and this kind of catalyzed the talk around it, or at least you're thinking about it. It's tough for me to kind of foresee that, because I feel like while there are large bases in California, both Navy, Army, all of these things, I feel like the federal government controlling the military kind of makes me think that the federal government would not allow the state of California to, I guess, voluntarily secede if they're going to try to strong arm the United States. Do you kind of get where I'm thinking here?
Yeah, well, but you can also do it like on a very pragmatic basis. So I have my own theories on secession, but that's probably a whole long podcast conversation. But and they're also very schizophrenic, because I was not a fan of Brexit, but I'd be a fan of, and we kind of already have it in California. We have, and especially in the Bay Area, we tend to somewhat ignore a lot of federal government ideas and adopt our own ideas, whether it's marijuana, gay marriage, doing lockdowns a week before other people. And I know you guys are in Pittsburgh, similar things. And I'm not singling California out as like we're good at everything, because we're clearly not. But you see a lot more progressive ideas coming out of different parts of the states. And I think as we localize and globalize at the same time, it does become this interesting question. So from a practical perspective, if you look at California in terms of its economy and say, well, let's assume that my theory is correct, and that the Bay Area in one sense, and maybe California in a broader sense, comes out of this virus crisis a little bit sooner, then the US could say, well, do we want to restart the California economy because it's such a huge tax base for us? Do we want to allow people to start doing trade internationally with other parts of the world that are deemed safe right now? Or do we want to just keep it on lockdown? So that becomes actually quite a pragmatic economic question. It becomes less about states' rights and secession and more about a tax revenue base. Like, do we want to like get things going again? Or when do we want to get things going again? Should we wait another 3 months when let the rest of the country catch up? Or should we just let California do this thing? Because if we let California do this thing, then California is going to have to enforce travel restrictions to other parts of the United States, which, as we've been talking about, is something that has never really been done before.
Yeah, that was going to be my point, was, because California is such a large economy globally, as you mentioned, there will be a convergence where, as things continue to get worse, and I think major players within the economy realize that this is not yet peaked, there will be a convergence where at some point the federal government, to your point, says, hey, this is more important than kind of the secession discussion or even the constitutional points that a lot of people bring up. We have to get California back interacting with the rest of the global economy.
And I think also, to me, I think this is, and it's strange because a lot of people are talking about, people leaving cities and so on. But if you kind of use the general concept of a city as a sort of broader metropolitan area, like I've considered potentially moving up to Marin, given everything that's been happening recently, but I'd still stay close to the sort of Bay Area metropolitan region. So you can think about the Bay Area as a city, and let's look at New York right now, which is happening there, and I'm very worried about what's happening there. So you see New York, and you say, well, hang on, the federal government won't give New York enough ventilators, or they won't allow them to, get masks and all that kind of stuff. Well, on the tail end of this crisis, if New York is smart and looks at this and says, well, and I'm talking about New York City and like the broader sort of region there, New York should say, we're going to staff up and have our own ventilators. Mm-hmm. And so that's when you start seeing the potential power of these city-states making decisions for the city and the general metropolitan region versus a federal thing, because they're like, hey, we're putting all this money into the federal coffers, and then when there's a crisis, they don't help us, or they don't help us in the way that we need. And they're making some arbitrary decision about, we'll hold on to this big reserve of stuff. But that city-state should make its own decisions. And then you start seeing, well, maybe the taxes that are coming out of that region should be going less to the federal government and more to that city government. And then you start, this is how secession effectively happens without actually happening. Mm. And like I said, like California pushing marijuana laws faster and Colorado doing the same things. This isn't like a California versus the rest of the country. It's really like, I think, like city-states thinking about things differently. And you guys mentioned where you are, there was lockdowns happen faster. And that's great. It's like these smart decisions that can be made by city-states, I think, will potentially benefit or not those particular regions as they make those decisions. Yeah, I don't think that other parts of the union should be disadvantaged because one city-state makes a bad decision. That's right. That seems weird.
Yeah, absolutely. And it's a fascinating time. I mean, it's certainly very stressful and there's a lot of terrible fallout, but in an effort, to stay sane, I found it interesting to kind of try and take a step back and look and see, to your point, which states are responding to this appropriately, especially at a time when it's very difficult to make decisions on what is an unclear future, right? New York has 20 million people that live there or whatever, and each daily decision has so many ripple effects, it becomes nearly impossible to choose wisely 100% of the time. So I would imagine you try to choose wisely a majority of the time and push on things with the federal government here and not push on them, in other places. But as we kind of bring this back to crypto, right? The conversation that I've been having with myself back and forth, and that's not a self-quarantine joke by any means, but the internal conversation I've been having is, how is crypto affected by this? And, there's memes going out about money printer go burr, and everybody seems to think that inflation is a real risk down the road, and perhaps the scarcity components of Bitcoin could see some positive effects from that. But when I look at crypto and Bitcoin specifically, I really look at it as a network, right? And a lot of the value, while it does come from the technology and some of the hardcore fundamental aspects of Bitcoin, a lot of the value comes from the network, right? It comes from those people who you met in 2012 or 2013, who were at those conferences, who were super weird and super passionate, and were lawyers or bankers or doctors. And, for the most part, most of them are still here today, 7 years later in this kind of social network based on hard money. So as you potentially have that same conversation with yourself, how do you think all of this change and kind of this chaos affects crypto and specifically Bitcoin in the future?
There's a couple of questions there, just kind of unpack them. I think that, I mean, I'm not going to do a John McAfee thing, but I do think that this will be. I do think that quarterly easing, printing money, and so on, is really one of the use cases for Bitcoin, and we see the demand for gold right now driving really high. I think that I'm not like a trader or a quant guy, but on a relative basis, the general space of crypto has fallen, I believe, quite a bit less than the S&P 500s and all these kind of other measures. I think that it's a bit, it's not exactly fake news, but it's also a bit of a red herring where people are like, oh, well, Bitcoin failed because the one time we needed it to go up, it actually went down. When you've got assets and everyone's just trying to sell whatever assets they have, everything's correlated. Everything just drops. Because everyone's just like, oh my God, I'm so terrified. I'll just get cash. So they sell anything, right? I think what people are now looking at is to say, well, hang on a second. This printing money, the Fed's out of bullets and the European Central Bank's definitely out of bullets. There's just nothing left to do. So what else could we try and get into and hold? And I think that's where Bitcoin and other currencies will, on a technical level, potentially appreciate. The other question you had about sort of the sort of social network of the space, I think that we are fortunate, and then we've certainly been fortunate at Orchid, in that a lot of us are very well trained in how to work remotely. I think there'll be a general global trend to more people working remotely in all industries that can. Obviously, if you're doing manufacturing and you actually need to be on a floor and doing things, but I think even in manufacturing we may see an increasing investment in automation. So some of these situations right now may actually precipitate a more virtual working environment and a more automated working environment. If Amazon can increase the automation in its factories, in its warehouses, then Amazon's not so affected if suddenly people can't come to work in the case of another situation. And then you start saying, well, okay, what do people do if there's more automation and more virtual work? What kind of things do we do? Like super randomly, but like, I noticed that Miley Cyrus started her own TV show during this period. And obviously she's got a lot of followers, but she was talking about it saying, I don't know why I suddenly decided to start a TV show, but here I am just to kind of entertain people. But now that's a new business for her. And so given that example is that what other kinds of entertainment do we see? What other kinds of applications do we see when maybe we're in a future where once this coronavirus is done, maybe we see something else or a different strain, and suddenly the government start realizing that maybe you need to have these like short, sharp lockdowns where we're like, hey, actually, no warm up this time. We're just going to lock down for 3 weeks. And everyone's like, okay, fine. Yeah, we're good at that now. We know what to do. And the kids, I'm teaching my kids virtually now, the kids know how to shift from a real life, like in real life example of working to a virtual world of working. So I think there's these, ideally, and I tend to be kind of an optimist on a lot of things. Ideally, we get to the point where it's not just some dystopian future where all the robots take over and we have to have universal basic income and we're just sitting around playing video games all day. Maybe we get to a point where it's in the fancy chair. Maybe we get to a point where actually we're able to transition smoothly between these transition points. And that's been our experience over the last 3 years, which is that we have a team where there's a handful of us in San Francisco that come into the office here and there, but mostly we're working virtually. And we've had to get good at it. And then we have offsites where we hang out and talk and kind of do more in-person creative stuff. I think that latter thing of how do you get to be creative in these environments? How do you have the virtual whiteboarding session? How do you make that feel good and be as creative, not quite maybe as creative as in real life? That's a challenge. The last point I would make is that I think that we'll see a consolidation, especially in the crypto space, of conferences. I don't think we need like 3 or 4 conferences in each geography every year. I think we need 1, maybe 2 conferences globally in each major geographical area. So like, I think we need 1 in the US. I think we need 1 in Europe. I think we need 1 in Asia. I don't think we need 5 or 6 in each of them. And economically, it won't scale either. This year will be a very tough year for conference organizers, and some of them will just decide to drop out. And that might actually be interesting for the space because maybe we'll see more unification between the different tribes. So Ethereum and Web3, maybe they should do a conference together. Maybe they should invite the Bitcoin guys and like kind of like get everyone actually in the room and less splintering and more kind of mixing together of the same ideas from different spaces, right?
Now that's a dystopian future for sure. Bitcoin and Ethereum in the same room. I don't know about that, but yeah.
Well, I mean, a lot of the guys are at the Web3 event anyway, and a lot of the guys from Web3 are at the DevCon events. So like, let's just have the same event. I don't know why we're doing different events all the time.
Steven, this has been a great interview, man. And I feel like we could have the dystopian conversation for like another hour. And because I'm super interested, I feel like a ton of people have fetishes. There's a reason why The Walking Dead's on TV and people really fetishize over this kind of stuff. I saw that you took a little bit of extra time there to call me out for my chair once again. So I do need to ask you one question, maybe throw you off guard, but probably not.
Sure.
You've probably answered this question many times. What is with the bunnies?
Oh, the Orchid bunnies. So just in case anyone's wondering what we're talking about.
We have. For those who are listening, he's showing us some stickers on his phone.
So, and actually, there's the one from Breckenridge and
amazing.
Denver, where we had the skiing thing.
Yeah. So just a backstory for those people at home. When we went through Orchid's website, their entire team, who's who of a lot of really interesting people, is all bunnies. There's no team pictures. It's just bunnies. So that was where this question came from.
Well, that one specific. So the history of the brand. So we work with this amazing team called Founder, FNDR, who did a lot of the narrative back in the day with Steve Jobs at Apple. And they really walked us through this concept because at the time, we'd done all of our kind of pitches and talks. And I gave this one talk, which we internally called the Scary Talk. And it starts off with William Gibson, picture of him in all in black of the future is already here. It's just decentralized, distributed. And I say, this is a dystopian view. Most people have a utopian view of it. And then I scare people with other images and talking about all surveillance and all these things. And they were like, this is actually very impressive that you managed to get so much traction, because typically fear doesn't sell very well. It sells for a certain period of time, but it doesn't scale. Because you don't really want to wake up in the morning and go, oh my God, I'm terrified. Let me turn my VPN on. What if it was more fun? What if it was this is a cool thing to do. I like using this thing. Let me start up the Orchid Bunny. Yay. And we've seen other brands in the VPN space, like Tunnel Bear is an example of people doing this well. But on the other hand, you have some companies literally putting billboards up saying, use a VPN or you'll get hacked. And then later they get hacked as a company. So we started this, and then we worked with, so that was our initial narrative and the way we changed the way we talked about Orchid. And then we worked with Frog Design on the West Coast, who are also quite famous company. They designed the Macintosh and worked with a lot of great companies. And they helped us visually create this idea of a natural internet. And then the bunnies were just kind of like some characters in the imagery that we had. And then one of our designers just started memeing this. And so every conference that we would go to, and hopefully we go to conferences again, we have these little stickers with bunnies, and the bunnies going skiing, and the bunnies pulling carrots out of the ground, which represent, pulling OXT. We'd have a whole bunch of these things. This sort of theme and memetic thing went with it. And then we had this website that we built for the launch, and then we had the team page, and it was pictures of the team. And I was just like, why do we have pictures of the team? This seems really weird in a company that's focused on privacy. Why don't we just make everyone a bunny? And so everyone became a bunny.
Gotcha. No, that's fascinating. We knew there was a story behind that for sure, and appreciate you delving into that. The final question. This is one we ask every guest. We take notes on this, and I'm sure our audience does as well. If you could recommend one book, any book, doesn't have to be crypto related, it doesn't even have to be a serious title, what would that book recommendation be?
Wow, just one. Okay, on the fiction side, by Chichin Liu, and it's the Three Body Problem trilogy. And this is a Chinese sci-fi author who has managed successfully to write fiction in China in sci-fi that is effectively commenting on Chinese society and quite challenging the way that he does it. But in order to understand his references, you need to kind of dig into the sci-fi and what's happening. So that's the one trilogy I'd recommend. It's a fascinating series. It was a bestseller, I believe. On the nonfiction side, I'm a big fan of a short book called On Tyranny, which is 12 lessons that you should think about during the world that we live in. A very, very short book. That's kind of like a short one that comes to mind. I read things like The Art of War and kind of a lot of kind of classic things in that kind of nonfiction sense. But I'm also a huge sci-fi fan. So,
all right,
anything by Neil Stephenson is a big one for me.
Yeah, we'll definitely take a look. I'm super interested in the first author that you mentioned, because I don't obviously read a ton of fiction work from any novelist coming out of China. So yeah, definitely interesting. Dr. Stephen Waterhouse, last question we have, or not question, but more like topic. Let the audience know where they can find you, as well as where they can find all topics related to Orchid.
Yeah, sure. So Orchid is just orchid.com, orchid.com. We have the Twitter handle Orchid Protocol. If you want to just email me directly, I'm the number 7 at orchid.com. And Twitter handle is D7Trol, like decentral, but D7Trol. And yeah, I'm pretty easy to find. Just Google me and you'll find a way to get a hold of me.
Amazing. Well, I'll send you the referral code for this chair here after the episode. But Mike, you got anything else before we head off here? That's it. It's been an absolute pleasure. Thanks again, Stephen.
All right. Thank you.
Hey guys, we hope you enjoyed today's episode. Make sure to check out Layer 1 on all the audio and video platforms listed in the description. Thanks for stopping by, and we'll see you next week.